video about, just the general market and some trades, ideas. Also, Jamie Dimon being a total mobster Russian sympathizer. We're going to break it all down in today's video, guys. Alright, let's get into it. Jamie Dimon. Who is Jamie Dimon? Jamie Dimon is the CEO of JP Morgan Chase, by the way. This not just in, but definitely in 2017 and 2009 and 2014. The list goes on. Headlines read, while Jamie Dimon calls Bitcoin a fraud, JP Morgan is busted for money laundering. You heard that right. They were fined $4 billion for mortgage fraud. Okay? Like, these people, this guy is a massive con man. Massive con man, guys. Going as far is to call the crypto market a tulip market. Okay? You guys don't know you don't know what a tulip market is. What are investable tulips? Okay, you don't. Okay, I see. Okay, well, let's learn your guys' ass. Investopedia, Tulip Mania. What is the Tulip Mania? Tulip Mania is the story of a major commodity bubble which took place in the 17th century as Dutch investors began to madly purchase tulips. You heard that right? Flowers, actual flowers, pushing their price to unprecedented heights. Tulip Mania is the story of a speculative bubble which took place in the 17th century, and that's what it was. Okay, and it exceeded the annual income of a skilled worker and cost more than some houses at the time. Investable tulips. It was a bubble. Yeah, they had bubbles in the 17th century, guys, and that's what they're calling. And that's what JP Morgan CEO Jamie Dimon called Bitcoin. He said it was a tulip mania. It's fake, and I agree with him. Okay, I really do. It is fake. I think the big whales of fuck it, tulips. We can call it Bitcoin tulips, or any crypto for that matter, tulips. The majority of the holders are Russian oligarchs and Chinese oligarchs. They're just hustling the working class into dumping their money into it so that they can create some sort of Ponzi scheme piggy bank for themselves. That's, that can't be regulated. That's what's happening here, guys. Okay? But, Jamie Dimon, he took a hard position there. He said, Bitcoin are tulips, and it's fake. That's what he said. Get right, guys? That's exactly what he said. Also, he was caught being a fucking fraudster, gangster, mobster, and charged like $4 billion for money laundering. So you already know his character. Okay? But this just in. As of May 26, 2022, headlines read, Jamie Dimon's JP Morgan says Bitcoin slide has created significant upside for crypto investors. You read that right. All of a sudden, there's significant upside for crypto investors after Bitcoin's ginormous fall. Now, why would he say such a thing? Okay, what does crypto's fall do? Who does it hurt? I'll tell you, the Russians and the Chinese. That's who it hurts because they're the whales, and they're getting crushed. And Russia continuously needs to cash out its crypto, to fund the war effort. But here we go. Russia's biggest cheerleader, Jamie Dimon, on the sidelines, telling all of his friends, his oligarch friends, and Wall Street to pump crypto. Guess what? It didn't fucking happen. Crypto did not go up. This stock market recently, it went up, but crypto did not. So no one bought this shit because they're not dumb enough. Okay, which is great. I'm glad everyone saw through that shit. Because this guy's bad news. Jamie Dimon recently comes out again. The fucking balls. On June 1st, 2022, literally today, Jamie Dimon says, brace yourself for an economic hurricane caused by the Fed and Ukraine war. No shit. Finally, a return to sanity. Okay? There are two main factors that has Dimon worried. So-called quantitative tightening, or QT, is scheduled to begin this month and will ramp up to $95 billion a month and reduce bond holdings. That means the Federal Reserve is going to unwind its balance sheet. What is its balance sheet? Balance sheet is just basically how much money that they printed out of thin air, in layman terms. They gotta, by them winding that down, it kind of makes the money real, if you want to think of it that way. So the further the balance sheet, once they unload the balance sheet, the money becomes more real. I mean, it's real immediately, but it's inflated now. It's worth less if they print it and don't make it real by doing this. Anyways, the other large factor, that's not why they're doing this. They're doing this because there's too much damn inflation. They're being called out on it. That's why they're doing it. They don't give a fuck. There's nothing's real to them. Anyways, the other large factor worrying Dimon is the Ukraine war. Oh yeah. All of a sudden he cares about the war and its impact on commodities, including food and fuel. Oil could hit $150 or $175 a barrel, he said. Oh, really? Here we go. Jamie Dimon on the sideline, Russia's biggest cheerleader. $150, $175 oil because his Bitcoin pump failed. And now he's trying to pump oil. Okay? Why? I don't know. Maybe they seized a bunch of his JP Morgan Chase's assets. Now he's trying to break even. Look, we don't know why he's doing this. Maybe he's a Russian sympathizer. Maybe he's just an all-around bad dude mobster. Maybe he doesn't give a fuck. We don't know. Okay, but one thing's for sure. You better brace yourself. And I agree with him on this one. The market has further downside to go. Okay, let's take a look at the takers. This is the dollar. So recently, the dollar has been on a monster tear. And when the dollar goes on a monster tear, the Nasdaq goes on a monster fall. So recently, this is the dollar, this is the RSI, this is the MACD. I think this is a 180-day 4-hour chart. That's what we're looking at. We're looking at a total aggregate of 40 days, and each bar is 4 hours of trading, and this trades all the time. So the dollar reached highs of 105, and it fell all the way down to 102. And check what it's doing. Is it going to get rejected here, or is it going to break? I think if it doesn't get rejected here and it breaks, it's going to put further pressure on equities markets, and it's going to crash the market again. The higher this goes, the worse it is for equities markets in the near term. If this can go sideways and consolidate, maybe we can see relief rally. I don't know. But if it doesn't, I really doubt it. There's way more pain to come, guys. Way more pain to come. Okay, and this is the 10-year yield. We're also looking at this. Okay, this is February, March, April, May, etc. Okay, so here's the moving average. You see? Bounced off the moving average and is now heading higher. Reached highs of above 3%, and look at the MACD. It's about to cross. If the 10-year yield goes higher and the dollar goes higher, the equity markets are coming down. Okay? Now, how can we turn that into real money? Okay, well, look at the Nasdaq. Okay, equity markets. What's going to suffer the most? Big tech. So, check out this little range. It ran up 10%, which is huge. Hit this fib level. If you don't know what Fibonacci retracement is, you need to figure that shit out, guys, because it's real life. Okay, Fibonacci retracement. You go on your TD Ameritrade, go to Dragon, go to Fibonacci, go to the high point, okay, of whatever chart you're looking at. Try to back out as much as you can. On a 90-day, 4-hour, maybe a year. Okay, it works too. Click the high, click the low. It'll create some lines for you. Okay, that's all you need to know. What is Fibonacci? Why is it the golden ratio? Why is it important? You're too stupid to understand that shit. Okay, you know it. I know it. So just click this freaking drawings right here. See it? Just click the drawings. Okay, go to Fibonacci, the percent sign, click. And then click, and it'll make some lines for you. Now, when it touches this line, it suggests that this is a big support or resistance. And usually the market wants to bounce to the support, and it's either going to go higher to the next line, guys, the next Fibonacci level, or it's going to fall down to the one below it. Okay, Fibonacci in a nutshell. But anyways, based on our analysis of the dollar and the 10-year yield, we believe that if those go higher, this can go lower. Okay, look at the RSI, look at the MACD, massively oversold. If it breaks this line, guess where it's coming down to? It's a long way down. Okay, the RSI is at 42. That's showing us, the money flow is at 42. That's showing us oversold. RSI is, just wherever it is. But just because the RSI looks like it could be here, for example, or here, like it was here at this point, right? And it still dropped. So we're kind of in the middle range. As you see, it's fighting between the lines, and who knows which way it's going to go. Well, the dollar and the 10-year yield will be our leading indicators, and those are showing sign of bullishness. So that MACD cross, the MACD is pointing down, and I put the little arrow up here so you can know. That's when this line crosses below. That means this is likely bearish. Okay. If this starts to go a different direction from the MACD, that's called a bullish divergence. Because the MACD is telling us one thing, the stock market's doing the other thing. So that's a very powerful move. So if it does go up and it diverges, it counters what the MACD is telling us. That means it's going higher. So that's the bulls might be saying that. Might be saying, hey, well, what if this is just, MACD cross? I mean, what if this can turn into a bullish divergence? Well, we haven't seen that shit yet. Okay, and based on the economic data and what's going on at the Fed meeting next week, or whenever it is, maybe 2 weeks, I don't remember, and all the economic data that's coming out on Friday, the non-farm payrolls, and what we're seeing in the dollar, okay, I mean, buckle up. We don't see anything obvious. And in this market, if we don't see anything obvious, we don't trade. Okay, let's look at, I was going to talk about copper futures and how to play copper futures. If you have TD Ameritrade, or if you have fucking Tasty Works or anything else, and you wanted to take this trade, you would enter here at 4321, okay, for one contract, and you would exit at 4444, okay, and for a gain of, I wrote it down, something like $2,500 if it does that, and then you would set your stop loss at 429. If you want to take the trade, you can take the trade. You need $7,250 or some shit like that to even start to take this trade, because that's how much one contract costs. But if you got balls like that, go ahead. Okay, this is the Amazon. I believe. Oh, look, see the fib level. These lines are just me measuring things. Don't worry about them. Fib level to the penny, some G. So I right click it and then edit it and put in the exact number. So I'm cool like that. But anyways, so we're seeing the momentum slow in Amazon. Can we take a position in Amazon? I definitely took a position in Amazon. I think it's going to come down. I think it has the stock split, and I think it's it has trading for 56 times earnings, which means in this market doesn't like risk. So I mean, it's a prime suspect. It needs to come back down to 12 at least, 20 times earnings, or 17 or some shit. But it's not doing that. So right now it's fucking overvalued. It's got to come down. But it already dropped a lot. It's got even more. Okay, it fucking like almost quadrupled during the pandemic. Fuck Amazon, bitch ass motherfuckers. Anyways, Nvidia, same thing. I think it's got more to come down. I think it's it's overvalued, and it could come down in a market that doesn't like risk. But what is the MACD doing? I mean, we already saw a divergence here, and we already saw the MACD cross right here, and the MACD is pointing down, but the price action didn't really go down. But if you measure the distance between 190 and 182, that's still a very large move to the downside. But it doesn't look like it proportionally to the moves, because this fucking stock trades like a meme stock. So we're going to trade Nvidia to the downside, keep those strikes like a twiker, and fucking always be closing. Okay, so we got Activision Blizzard. Okay, this was my trade idea for you guys. So I'm thinking about Activision Blizzard at the 80 and 85 strikes, expiring in July of 2023. Okay, in your Roth IRA with this month's contribution, which is $500, and letting it expire for a max gain. Okay, which means you should double your money. Get put credit spreads at the 80-85 strikes. And what was the expiration, guys? At July 2023. Russell, holy fuck, that's more than a year from now. Shut the fuck up. Okay. I tell you how to double your money, you zip it. Alright, now I'm gonna tell you why. Since you're being a little baby and asking me why. Okay, so Microsoft is set to acquire Activision Blizzard in January. That's fucking old news, Russell. Like, why do we want to hear that? Because I'm telling you that's why. Okay, Microsoft is to acquire Activision Blizzard to bring the joy of community of gaming to everyone. Blah blah. That's not why they're doing it. Freaking Warren Buffett needs the last hurrah. I said it because Warren Buffett and this fucking Bill Gates are best friends. And Warren Buffett is invested in Activision Blizzard before he announced it. So speculating, did he know he fucking did the best friends? Now, But also, I mean, it's a good move. I think, you know, especially StarCraft is like one of the best games of all time. And, you know, your mom is addicted to Candy Crush and my dick. I'm just playing. But seriously, Microsoft will acquire Activision Blizzard for $95 per share in an all-cash transaction. Okay, what does that mean? What the fuck does that mean, Russell? Okay, they're acquiring it. I don't fucking know stock market shit. Like, what does this all mean? Well, I'll tell you. You just shut the fuck up. It means that the stock will be valued at $95 a share. The minute that this deal is finalized, the stock of Activision Blizzard will go to $95. Okay? Now, well, what if I'm holding shares? Well, I'm not telling you to hold shares. I'm not telling you to put credit spread whereby you receive credit. And the goal of the trade is for the other side to expire worthless, which it will if Activision Blizzard closes above $85 in July of 2023, and it will because Microsoft is going to buy it for $95, which is more than $85. Well, why don't we just put our strikes at $85.90? Because if it goes lower, which it hasn't, we've seen the stock of Activision Blizzard, it's absolutely flat, and even in the devastation the market has been going through. But if it goes lower, based on, you know, market devastation or news or something else, you could get assigned. So you don't want, and that'll fuck up the entire trade. So you don't want to get assigned. So we're not going to do assignment risk fucking strikes. That's why we're doing 80-85. Now, well, okay, so I'm not going to get assigned. I'm going to just put credit spread, and if it closes above 85 and I receive more than half the spread and credit, will I double my money in July of next year? Yes, you will. Okay, should you bet the farm? Never. We don't bet the farm. We just breed pigs and sell them. You just go, what is this? That's why you want me to invest in Activision Blizzard. I've seen that freaking name somewhere. Mr. Rusty Russ. I fucking knew it. You fucking fanboy StarCraft 3194 game playing ass motherfucker. All brutal missions. You beat all the missions on Wings of Liberty on brutal, you fucking nerd. I knew it. Look, shut the fuck up. Okay? This is a good trade. Right? So, we're just gonna, I mean, if you want to take it, you can take it. If you don't want to take it, then you don't have to take it. Alright? Oh, this is, what am I showing you this for? Forgot something. The proposed deal still requires approval from shareholders. This is the Activision Blizzard and Microsoft Activision Blizzard deal. This is not just stock price, but a future blah blah. Doesn't matter. Which is expected to push the closing to June 2023. That's why we put our expiration date to July of 2024, so that when this deal closes and the stock closes above our strikes, we get to keep the premium and double our money. Okay? Bada bing, bada boom. Jamie Dimon is a fucking crook. See through his bullshit. He's not always wrong. And let's stay safe in our trades, guys. Okay? Let's let the dollar be, and the 10-year yield be the leading indicator and not hype. If you don't want to trade, you don't have to, because this market is hard for even me. So if I were you, I would just do the Roth IRA trades, and do the $500 a month in a Roth IRA, and try to save as much capital as you can every single month, and put it in your trading account. And here's an idea: don't fucking use it, and just wait, and we'll find some good trades later. But right now, there really aren't that many good trades. Alright guys, that'll be it for me. Alright, also make sure to fucking like. I can't grow this channel without you hitting the like button. Okay? Like, you want to see more videos, and if you want to make good videos, that's how this works.